Hey guys, Daniel the Adjuster here. Thank you so much for joining me today. We've got a special feature for you today, especially a really cool bonus at the end, so make sure you stick around for that. I'm going to talk about 5 very important things about how an adjuster gets paid. I know that everybody is trying to sit there and go, wow, how much am I going to make as an adjuster? Well, I'm not going to go over the specifics of detail for that. I've got another video for that, but I'm going to talk about how you get paid. So stick around. We'll be right back. All right, so the 5 things that we're going to talk about is 1, who pays me? Number 2, how do I get paid? Number 3, do they take taxes out for me? And number 4, when do I get my money? So stick around for the last one though. I'm not going to tell you right now, but at the end of the video, you will be thankful that you waited. So let's get started. Who pays me? Well, as I mentioned before in some of my other videos, firms are the ones that you work for. These are the people that you sign up on their rosters in order to obtain work from them. They are the go-between between the insurance company and you. So, the checks come from them. The insurance company is not the one that directly pays you. They have to operate through a producer, and the firm is a producer. So the producer, the firm, is the one who's going to send you the check. Now, there is a fee for that producer to work for you to help you find work. And that fee is 40% of the entire billing that we send to the insurance company. I know that sounds like a lot, but you have to remember, they're doing a great service. Number 1, they operate all your finances for you. Number 2, they find you work. And number 3, they take care of all your billing, making sure that you get paid every couple weeks. They also help you find work. If you don't have the firms working for you and helping you, you're going to be sitting at home wondering how in the world I'm going to find work. So firms are a great thing. So one of the things that you want to remember is if you only work for one firm, you're only receiving the work that they can provide at that one time. But if you work for multiple firms, I can get 2 or 3 claims a week from this one, 2 or 3 claims a week from that one, maybe I get 5 from another. It can really start to add up. Even though they're not giving you a lot of work, if you multiply it by 5, 6, 7 firms, you can stay very busy. Now, the downside to that is it can get very confusing because most of the time these are different insurance companies that you'd be working for. I've done it before. I did it because I wanted to stay busy because I was only receiving a couple claims from each firm and each carrier, so it works out. But it's ultimately when you get to become more and more familiar with one insurance firm, one insurance carrier, you will find that that's the better one to work for. You get more work and it works out better that way. Also, the more that you work for, the busier you'll stay. Just remember, if you can receive work from multiple different insurance companies, when one is not busy, the other one might be. So it works out really nice. Number 2, how do I get paid? Well, you don't get paid by a check. Unfortunately, in the old days when we would go down, pick up our paycheck, it doesn't exist for an adjuster. The way that they pay is through a direct deposit. Direct deposit into your personal bank account. Now you can choose whatever bank account you want it to go into, but they're going to send it electronically to your bank account through a direct deposit. Each time that you receive a check, you will receive a detailed billing by email regarding each claim that you've worked, the amount that it was included in that billing, and a total at the bottom. You could keep track of that, but I found out over the years that their accounting is very detailed and very thorough, and I don't have to worry about getting paid. Now, number 3, do they take taxes out? The big answer is no. So you're being paid as a gross salary. Gross means no taxes, no medical, no Social Security, no Medicare, nothing has been removed. This is 100% tax-free income. Now, does that mean I don't have to pay taxes? Absolutely not. That just means they're leaving the total burden for taxes on you. The simple way that I handle my finances is when I receive my direct deposit, I see that come into my bank account. I have set up another account online so that I can immediately transfer 20% of that paycheck into that account. Now you're saying 20%, that's crazy. Well, you have to remember you have to pay federal and you also have to pay state. So you want to make sure that you have enough covered. It would be lovely if I would get a return, but it seems that I never do and I always owe more. So typically 20% allows me to have very little to owe at the end of the year, but it also covers me for what I need to pay for taxes. Now, throughout the year, we're required to pay our taxes quarterly. So when each quarter comes up, I just empty that bank account, I send it online to the IRS as a prepayment to my taxes for that year. It's simple, only takes a few minutes to transfer that money, and it saves me having to deal with that issue there. Now, one of the big things that is tempting is you see that this tax account grows and you're looking into your bank account and you're saying, man, I got $8,000 in there for the quarter or whatever it happens to be. It can be tempting to think that you have that ability to spend that money. Well, with all seriousness in mind, just ignore that money is there and just know that it is accounted for taxes. Nothing worse than getting at the end of the year or the end of the quarter and realizing you spent that money and don't have the money for taxes. Hey, the IRS is going to get their money whether you delay it or pay it. So just remember that. Then you have to also remember you're going to be doing your own taxes as well. Make sure that you keep a very detailed billing or record of your business expenses. Think about everything that you spend. Gas, food if you're out of town and you have to spend on that, your gas for your vehicle, clothing that you use for your adjusting, if you have specific clothing that you use to climb or whatever. If you have any gear, your rope and harness gear. Just remember every single detail of anything that you use for business is considered a deduction. I also use an iWatch that I solely use to notify me of calls, emails, text messages, whatever it happens to be. I write off about 80% of that iWatch as a business expense, as well as my cell phone bill and other things in that regard. Just remember, everything that you use for business expense has a percentage that you can use as a deduction. Just keep good records and you should be able to deduct all that without any problem. So make sure that you like and follow if you find anything useful here. I love you guys for sending me comments and questions. So just keep doing that and we'll make sure we can get those answers to you as quick as possible. The fourth question is, when do I get my money? That is what we all care about. So here we go. You get paid typically on the 15th and the 30th of every month. That's their billing cycle. About every 2 weeks, you're going to get a paycheck. Remember, I told you you're going to get an email notification letting you know that account is about to be credited with whatever your bill, your invoice states. Now, if you don't work any claims in the prior 2 weeks, I can imagine your check is going to be pretty small. So think of it in cycles. So sometimes you'll have a really busy couple weeks and then it might go down a little bit. So notice that your check's going to be a lot larger 2 weeks later, whereas then the week after that or the 2 weeks after that, it might be a little bit smaller. So just see these things as cycles and try and set yourself a budget that you can live on, knowing that even in the slow times you can live on. And then when there's bonuses, meaning big months of lots of work, you can set aside that extra into an emergency fund is what I call it. I keep about $25,000 into an emergency fund just for those times that I feel like, hey, I'm either going on a catastrophe, I know the winter months are coming and I'm going to have several months of very low income. I'm going to live on that extra. And then once the summer months come back in, I may have depleted that $25,000. So in the summer months, I'm going to make sure I build that account back up again in those busy summer months. It's just a way of protecting us from not going into debt in those slow times, but having our own money that we can rely on in those slow times. So normally that money that is direct deposited shows up into your account typically 1 to 2 business days after you receive that email. So just know that money is actually technically there once you see it pending in your financial statement. I've gone online and I've seen actually a pending area that shows I have a deposit pending. The wonderful thing about it is I can actually spend that money if I want to because it shows it as a pending direct deposit. Typically the banks see those pending direct deposits as good money and already in the account money, so you shouldn't have a problem. All right, well, thanks for sticking around till the 5th point, my bonus offer here. It's not really an offer, but hey guys, this is really good stuff for you guys to remember that there is even more money coming. Out of each paycheck, they are withholding 10% of the total invoiced bill for the future. Okay, so think about this as kind of their assurance that if anything comes up with this claim a couple months down the road when maybe supplements occur or they need some more answers in this claim, they want to make sure that you're going to do some work on that claim if they ask. So they hold 10% back of every claim that you work for 3 months. And you're like, oh, that's terrible. Well, you really don't know that it's missing because, again, once you receive the direct deposit, you know what money you have coming in. And that 10% is kind of like a bonus that's just sitting around, floating around. Now, here is the wonderful news of that holdback. So when I get into my winter months, things are slowing down. But 3 months prior to that, I was actually probably really busy during the summer. So think about it. Some of my largest checks now have 10% that have been held. That now, stuff that I worked back in August, November, August, September, October, November, all those busy hurricane months, now is going to come back to me in December, January, and February, the slowest months of my career. So what's wonderful, and I have seen this, I just recently saw this, my regular claim work for a couple weeks, I made about $700. My holdbacks came back at $800 that I had held back from those prior 3 months. So my check was $1,500 for 2 weeks for one firm when it would have been $700. So it actually doubled my pay for these holdbacks, and it was such a benefit because, yeah, when it's really slow and you need the money and you only get a $700 paycheck, you're like, man, I could have used some more money. Well, then it comes in at $1,500, $1,600, and you're like, wow, that's so cool. So holdbacks are actually a really good benefit in the slower months, but it also creates this residual income. So think about it. If I was to stop my claims immediately, for the next 3 months, I'm going to receive, obviously, the last 2 weeks of claims that I've done, but all my holdbacks for the next 3 months. So if I wanted to stop a firm and say, I don't want to work for them anymore, I've done some work with them, I don't like them, I want to go to a different firm, then you know that you're going to have a little residual income that's going to be coming in from quitting that firm and moving to the next one. Now, I don't recommend dumping one cold turkey, but if you wanted to weed them out because they're not the best carrier to work for, or the firm themselves is not very good, then sometimes, weeding them out slowly can be a good way to still see some money coming in, but not cut them off cold turkey. One thing, and the last thing that I have noticed, is that I don't have to keep these firms accountable to make sure that they pay me the money that's owed to me. You have to remember, we're dealing with insurance. Insurance fraud allows us to have the power to know that that firm is always going to pay us. Because if we can account to them as not paying me, that's considered insurance fraud, which then they could lose their license as a producer and be out of business. So just remember, they're held to a very, very high standard. I have never had an accounting error with any of the firms that I've worked for. In fact, it's been so detailed, they've caught me on mistakes far more than I've ever caught them. I've never caught them in a mistake. So I feel very confident trusting them with my money, trusting that they'll pay me exactly what I billed for, and things work out really nicely for us. Well, hey, this is Daniel the Adjuster. I thank you so much for joining me on this episode of learning about how we get paid as an adjuster. Watch my other videos. Stick around for more. This is Daniel the Adjuster. Bye-bye.